Most founders would ideally love to have an IPO exit, but not all businesses are suited for an IPO exit. Most of them actually get bought out on an M&A transaction.
High-end growth capital has obviously gone through a little bit of an up and down over the course of the last 2 or 3 years. London is absolutely the number one global tech centre outside the US. In fact, I go further than that. I'd say it's probably outside Silicon Valley.
Hello and welcome to the Latham Tech Podcast, where we survey the latest trends emerging from the world of tech and explore their impacts on your company, both the opportunities and the risks. I'm Xing Lo, a partner in Latham's Emerging Companies and Growth practice in London. And joining me today is my fellow partner, Mike Turner, who works on venture capital, growth equity, and M&A transactions for clients across tech, media, and telecommunications. Hello, Mike.
Great to be with you, Xing.
Let's start with the first question. Outside of the US, where do you think London sits in the global tech ecosystem?
I think you know what I'm going to say to that, Xing, which is I think London is absolutely the number one global tech centre outside the US. In fact, I go further than that. I'd say it's probably outside Silicon Valley. The data consistently over the last 10 years or so supports that. And I think there's very good reason for London having obtained that place in the market and attained that place in the market. London always has been, and I hope always will be, the leading financial centre in the world. And that is very relevant for reasons we'll come on to talk about, I think, even in the context of emerging companies and the funding cycle. Secondly, if you go back to 2008 when the world fell apart financially, the UK government at the time was actually very smart and quick to alight on the tech sector and the emerging companies sectors as being something they really wanted to support and promote as they were rebuilding, in our case, the UK economy. And those two things, I think, have really led to London having that position as number one. Don't want to sound arrogant about that, and I think it is absolutely fair to say, and you and I both know this, that there are many other cities around Europe which do a terrific job now in the tech ecosystem. They've really developed some very strong tech economies of their own. And the one that I'd call out is probably France and Paris, which has really done well, and Macron has been a huge supporter of the tech economy. Somewhat amusingly, the London Tech Week coincided with the Viva Tech Week in Paris. So you had tech icons like Jensen Huang speaking in London on a Tuesday and in Paris on the Wednesday. Both were terrific events, and I think they really validated each other.
That's great. When you're speaking to a founder of an emerging company here in Europe and they're looking to raise money, what would your advice be about where should they go to raise money? Should they go to the US? Should they look at Europe?
I think my answer to that would be quite nuanced. I think that a company needs to think about where to raise capital depending on its objectives at the time. I think for an early stage company in Europe, quite clearly raising capital in Europe makes a lot of sense to start with. But then at, Series A, Series B stage, they may be targeting expansion into the North American market, in which case raising money from the US would make a huge amount of sense to the extent that capital can help the company in many ways with that expansion plan. And I think that applies to many other parts of the world now as well. So I think it's a far more nuanced question. There are far more opportunities for companies to think about where they might want to raise capital, because there are a lot of sources of capital now, well beyond the US and Europe as well.
Yeah, I agree. I mean, even in Europe, we see US funds setting offices here in London. So, founders actually have the benefit of US investors here in the market. So let's talk about trends. Where do you think has been the beneficiary of heightened investment activity at the moment?
Well, you can expect me to say AI first, second and third, I'm sure, because that is obviously where a huge amount of the most visible capital is being deployed at the moment. And it would be remiss of me not to point out that the UK really has a very strong deep tech and AI heritage. Let's not forget the DeepMind was a London company, still is a London company in many respects, and that, Google's own AI plans very much revolve around DeepMind. So, and then you have players like Mistral in Paris, which is one of the leading Gen AI companies in the world now. So I think AI, of course, fintech for sure. I mean, London is just the standout place in the world for fintech. I was listening to the founder of Flex, which is a US fintech, speaking at London Tech Week, and he said he is just always amazed when he comes to London at how proficient and leading we are as a fintech economy. Beyond that, I think enterprise software is the gift that keeps giving, and quite clearly there's a lot of really good enterprise software companies in the UK. The one place that I'm pleased to see quite a lot of capital being deployed now is in the world of video games and esports, which have become the most important part of the digital economy. So that's pleasing to see. What else are you seeing?
I'm seeing quite a lot of activity in the defense tech sector.
Yes.
We've been working on a number of transactions, not just in the UK, but also in other parts of Europe, whereby investors are investing in all kinds of defense technology, where it touches on deep tech, where it also touches on hardware. So it's quite varied.
Yes, that I think that's a really good one to call out. And then beyond defense tech, we're probably also seeing some. I know you and I are seeing a lot in the consumer space in the world of beauty tech, for example. So there are always going to be some interesting new areas developing as each year goes by.
Well, I think it's always fun working in this sector. We come across all types of different businesses. But why don't we move into fundraising trends? So what are you seeing when it comes to primary and secondary? Are you seeing more secondary these days because of the M&A exit market being pushed out?
Definitely. So I think one of the new dynamics, relatively new dynamics in the market, is that a lot of the earlier stage, particularly institutional investment funds, have found themselves tied into their investments for a much longer period of time than they would like. So finding a secondary exit for at least part of their investment has become increasingly important to them. We're also seeing buyers. We're seeing, a good appetite for secondary acquisitions, often because those can be bought at a discount to the primary value that is being raised at which the company is raising capital. Often those earlier stage investors are very happy to sell out at a discount because that can still show them a very good return on their investment. So I think it's a dynamic which tends to work very well, but the secondary market is very buzzy at the moment.
Yeah, I think you and I have been involved in quite a number of growth stage companies' financings. And when it comes to growth stage, it's always about cleaning up the cap table, isn't it? So a large portion of the financing funds would go into secondary to take out early investors, early employees, for example, especially where a company has issued plenty of equity and has like 100 employees on their cap table.
Yeah, it is that. And I think the other thing you just touched on when you mentioned employees is that actually finding ways to give some liquidity to the employees and to keep them happy and to allow the company to take a little bit longer to find its own liquidity is a really important point as well. And we've seen some very sizable employee liquidity programs being introduced in Europe.
Why don't we talk about the kind of players we're seeing in the market? I think one of the things that I'm finding with London is emerging as the hub whereby plenty of sovereign wealth funds are in the market. We've worked with quite a number of them. What's been your experience?
Well, good for you for calling that out, because I think that's been one of the biggest disruptive influences, positive disruptive influences in our market for the last couple of years. The Middle Eastern sovereign wealth funds in particular, as they're looking to regenerate their own economies with tech investments. We have seen them being particularly prolific in the UK, but around Europe generally as well. Why I say particularly prolific in the UK is that a lot of those funds have established their offices in the UK. In fact, their global offices are headquartered in London. And that goes back to the comment I made earlier about London, the importance of London still being the leading global financial centre. So I think I would call out the Middle Eastern SWFs in particular as being the greatest influence on my life professionally over the last couple of years in particular. What else are you seeing?
We're seeing quite a number of strategic players in the market, so your
Yes.
CVCs, and a lot of these strategics come from the US, in fact, and they're very interested in the AI, deep tech companies here in Europe.
The CVCs, the corporate venture capitalists, are very, very important. You're absolutely right. And I think seeing strategic capital in companies now is quite commonplace, actually, from Series B on. And probably, actually, I don't see too many of them at Series A, but Series B, as the companies are really beginning to find traction, we're tending to see them. Yeah, I agree.
And I think the PE growth funds are still opportunistic. I think every once in a while we still see them coming up on fundraising rounds of companies. Presumably you do the same.
Yeah, I think that high-end growth capital has obviously gone through a little bit of an up and down over the course of the last 2 or 3 years. But we're now seeing the larger PE minority equity investment funds coming back into play. But we're also seeing, interestingly, for the first time for a good 2 years, I would say, particularly the US crossover funds really coming back into the market, and they've got to have something to cross over into. So hopefully that is an encouraging sign that the IPO markets are coming back.
So this leads me into the next question. With the diversity of investors in the market, how would you advise a founder who's looking to raise money from a sovereign wealth fund versus a venture capital or conventional VC funds? I think they're culturally quite different.
Yeah, and culturally quite different from a large corporate, for example. I think it's a really good question, and it's a really important piece of advice to founders to think very hard about the differences that are required to their approach in negotiating with these investors. You're going to see a lot of cultural differences depending on the parts of the world. Like a Southeast Asian sovereign wealth fund is very different in its behaviour to a Middle Eastern sovereign wealth fund, which is just very reflective of the cultures from which they come. I think the critical thing is for founders to understand that there's no book, there's no playbook, which applies to everybody. You can't look at a whole group of investors and say, okay, you guys have got 28 days to do this deal, because a sovereign wealth fund may well want 6 or 8 weeks, because they just take a little bit longer with their diligence. They're a little bit more hierarchical in their approach. It doesn't make them a bad investor. It doesn't make them a great investor. It just makes them an investor. And I think it's really important that founders can understand the difference, not only that investors can bring to the table, but in how they will behave during the course of the transaction. One thing I would point out is that also founders should be thinking about how patient the capital is that they raise, because of course strategic or even sovereign wealth fund capital is a lot more patient than institutional venture capital.
Thanks, Mike. So on to the next question that I have is about exits, because I think having different types of investors on your cap table may lead you to a different outcome on an exit potentially. Am I right or wrong?
Yeah, look, I think the first myth that needs to be debunked, if you like, is what an exit actually is, because institutional investors and private equity will talk about an IPO as being an exit. For a founder, it's not an exit. For a founder, an IPO is the next stage in the company's growth, and the founders are likely to be committed to running the business for many years to come, an indefinite period of time. An M&A is an exit because the founders are selling their shares, they're realizing their investment. They may well be tied into the business for a year, 2, 3, post-acquisition as part of the integration with the purchaser, but it's a very different thing. So I think, first of all, I would say talking to founders and those founders talking to their investors and really just trying to manage expectations around what type of process is best for the company, liquidity process is best for the company, and I use that expression far more obviously than I would an exit. Does that make sense?
Yeah, it does. I think, most founders would ideally love to have an IPO exit, but not all businesses are suited for an IPO exit. Most of them actually get bought out on an M&A transaction.
I heard a very interesting podcast just this morning, actually, with one of the very leading private equity sponsors, their growth fund, and the guy who runs that growth fund in Europe, saying, it actually a very small percentage of their exits are IPOs. He said everyone thinks we drive all our portfolio companies to IPO. I can't remember the precise number. It was 75% or 85% are by way of strategic exits. Only 15 or 25% are by way of IPO, which I think makes the point.
Yeah, I think you're right. That's very interesting statistics, actually. Well, so that takes us to the end of the session. Thank you so much for your time, Mike. It's been great having you here.
Thank you, Xing. Always great to chat.
You can subscribe and watch or listen to new and archived episodes of Latham's podcasts on lw.com, YouTube, Apple Podcasts, Spotify, or wherever you get your podcasts. If you'd like more information about the topics in this podcast, please email us from the links located in the show description.